Good afternoon, everyone. So today we'll discuss problems under differential cost pricing. So in the last previous videos we have completed market-based pricing problems. So the next type of pricing is differential cost pricing. So this differential cost pricing means charging different prices at different prices to different customers and in different areas, like charging one price for one customer, charging one price for another customer, and also charging one price in one specific area, and in other area the price will be different. That is called as differential cost pricing. For example, if we are selling the goods within India, so within India if we are selling, the price will be different. If we are exporting the same goods, the price will be different. So that is called as differential cost pricing. So here there is one company which is producing currently at 90% of its capacity. So it is producing 13,500 units. So the units is 13,500 per annum yearly. It operates a flexible budgetary control system. So flexible budgetary control system means the budget, the process of making the budget, this budget adjusts with the changing revenue levels. ಸೊ ಹೇಗೆ ನಮಗೆ ರೆವಿನ್ಯೂ ಇನ್ಕ್ರೀಸ್ ಆಗುತ್ತೆ, ಹೇಗೆ ನಮಗೆ ರೆವಿನ್ಯೂ ಡಿಕ್ರೀಸ್ ಆಗುತ್ತೆ, ಸೊ ಆ ಪ್ರಕಾರ ಬಜೆಟ್ ಪ್ರಿಪೇರ್ ಮಾಡೋದು ಏನಾಗುತ್ತೆ, ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ ಆಗುತ್ತೆ. ಸೊ ಲಾಸ್ಟ್ ಪ್ರೀವಿಯಸ್ ಪ್ರೊಡಕ್ಷನಲ್ಲಿ ನಮಗೆ ಎಷ್ಟು ರೆವಿನ್ಯೂ ಬಂದಿದೆ ಅದರಲ್ಲಿ ನಾವು ಯೂಸ್ ಮಾಡಿ ನೆಕ್ಸ್ಟ್ ಬಜೆಟ್ನ ಪ್ರಿಪೇರ್ ಮಾಡ್ತೀವಿ. ಸೊ ದಟ್ ಈಸ್ ಕಾಲ್ಡ್ ಆಸ್ ಫ್ಲೆಕ್ಸಿಬಲ್ ಬಜೆಟರಿ ಸಿಸ್ಟಮ್. So this company is using flexible budgetary control system. So the following information has given. So here it has been told that this company is currently operating at 90%. So they have given 90% capacity, and also they have given 100% capacity details also. So the sales is 15 lakhs in 90% capacity. When we are talking about 100%, it is 16 lakhs. Fixed expenses fixed expenses are 3,500,000 and 3,500,000, and semi fixed expenses are 97,500 in 90 capacity and 1,05,500. Next, variable expenses 1,45,000 and 1,49,500. Units available as it is given 13,500 for 90% capacity, and for 100 it is 15,000. Now the labor and the material cost. So here they have given information about fixed expenses, semi-variable and variable expenses. Now they are talking about the labor, the workers, and the material cost per unit are constant under the present condition. So we have to calculate all the labor and the material cost. Next, the information given is profit margin is 10%. So profit margin is 10%. So this profit margin will be calculated on 10% of sales. As they have given sales, if we deduct sales from sales, fixed expenses, semi-variable and variable expenses, we'll get the labor and the material cost, and also from that we have to deduct the price first. Next, what we are required to do is, so we have to determine the differential cost pricing. pricing. First of all, for 13,500 we have to calculate the material cost. Next, if in this 13,500 if we are increasing 1,500, so in this situation what will be the differential pricing? So 13,500 plus 1,500 is 15,000. So when the firm is operating at 13,500, what will be the selling price? And if the firm has increased its units by 1,500, that means 13,500 plus 1,500, it equals to 15,000. So in case of 15,000 units manufacturing, what will be the selling price? Differential selling price we have to determine. That is first case. Next case, we have to recommend the price for the export. So if the same thing is selling in domestic market, that is for example in India, so what is the selling price? And if we are exporting, what will be the selling price? So this is the question. So let's solve the question. So I told you, first of all we have to calculate this labor and material cost. So for that they have already mentioned the selling price. So selling price, so one thing here, they have given 90% capacity and 100% capacity. So we have to take only 90% details. Why? Because the company is currently operating at 90%. So currently they are operating at 90%, so only we have to take the 90% details. So after that they have told that they have increased the units by 1,500. That means 13,500 plus 1,500 means it is 15,000. So that 15,000 is operating at 100%. So in second case, while calculating the differential price of 15,000 units, we have to take the details of 100%. Okay. So first of all we have to calculate the labor and the material cost. So for that we need sales. So first of all take sales. So sales, that is of 90%. Why 90% means? Because the firm is currently operating at 90%. So firm 90% sale is 15 lakhs. So 15 lakhs is the sale. Next year they have mentioned that profit margin is 10% on sales. So sale is 15 lakh and profit is 10% on sales. That means 10% into 15 lakh is 1,50,000. So if we want the cost to come, we have to deduct all the from sales. We have to deduct the profit we want to achieve, next all the variable, that is the direct and the indirect expenses. The remaining portion will be the material and the labor cost. Simple. So 90% 15 lakh and profit 10% means 1,50,000. So the figure which will come, that is 13,50,000 is the cost of goods sold. So less other cost other than material and labor, which is given in the problem. So the given cost first is the fixed expenses, that is 3,500,000, semi-fixed expenses 97,500, variable expenses 1,45,000. So from cost of goods sold, if we deduct all these expenses, so from the cost of goods sold, if we deduct all the expenses, that is the fixed, semi-variable and the variable expenses, the cost of material and the labor, that is the final figure, will be 8,07,000. So 8,07,000 is the cost of material and the labor. So if we want the cost of material and the labor per unit, we have to divide it with the total units manufactured per annum. So 8,07,000 divided by 13,500 units, the per unit cost is 59.777. So here next is we have to prepare, as they have asked, we have to prepare the differential cost pricing when they have increased 1500 units. That is, now we have to calculate the selling price at 100%. So here we will make a difference between 90% capacity and 100% capacity. So now in this solution we need both this information. So why? Because we have to calculate the differential cost based pricing. So we will differentiate what is the cost at 90%, what is the cost at 100%. So finally what will be the figure? That will be the differential cost pricing. So here statement showing the differential cost pricing if we are increasing 1500 units with 13,500, so 15,000, that is 100%. So now reduction, that is the particulars, 90% capacity, 100% capacity, the difference will be the differential cost based pricing. So first of all, why we calculated this material cost means why? Because we need this per unit material and labor, and they have told here that the material and the labor cost remain constant under present situation. So they are telling that in 100% and in 90% the labor and the material cost per unit will remain same. So first of all we will calculate the material and the labor cost. So already we have calculated for 13,500, that is 8,07,000. So take 8,07,000 here, and for the 100%, as we don't know the material and the labor cost, just we have to take the per unit, as they have told that per unit is constant. Per unit is constant for 90% and 100%. So 59.78 into 15,000. So the answer is 8,97,700. So 8,97,700. So see the difference here, 8,07,000, here 8,97,700. So the difference between the 90% and the 100%, that is 8,07,000 minus 8,97,700. So 8,97,700 minus 8,07,000, the difference is 80. The difference is 89,700. Next, variable expenses. So the variable expenses given in the problem is 1,45,000, and in 100% it is 1,49,500. So 1,45,000, 1,49,500, the difference is 4,500. Semi-fixed, same. Semi-fixed expenses for 90% it is 97,500, for 100% it is 1,05,000. So variable expenses we have done, fixed expenses is fixed, that is same. So semi-variable expenses 97,500, 1,05,000, 3,000 is the difference. So fixed means it is fixed, it is unchangeable, so it is nil. So if we total all this, 89,700, 4,500 and 3,000, the differential cost is 97,200. So if we are operating at 90%, the cost is 13,50,000. When we are operating at 100%, the cost is 1,44,700 and 14,47,200, and the difference is 97,200. So next here they have told us, ask us about export price. So what will be the export price in case of we are increasing 1,500? So here it is. So cost we have calculated, that is 97,000 200 differential cost. So if we divide it with number of units, so number of units here it is 15,000. So 97,200 divided by 15,000, the cost per unit, differential cost per unit is 64.80. So if we want to quote price for export, means whatever the price which is above 64.80 will be acceptable for the company. So above whatever the price you are charging in the domestic market, if you want the same goods to be exported, you must charge it above the domestic price. So that is 64.80. So that's it about this problem. If you have any doubt, you can ask me in your group. Thank you.